What's going on, guys? Welcome back to another episode of Hustle with JesseW, and today I'm going to tell you what I think is going to happen in the market this week. Check it out. All right, guys, so thank you very much for tuning in. I hope you enjoyed the video and you learned something. Do me a quick favor and hit the like button for me. It really helps out tremendously. Also, remember, I stream Monday through Thursday and sometimes on Fridays. I might start doing it more often. In the pre-market, we go over all the runners, the scans. We set up the watch list together, and I do Q&As. So make sure to tune in here to the channel. Hit the notification bell so you're alerted when I go live, because sometimes for some reason I won't show up in the YouTube feed there when you go to the homepage on your YouTube account. So hit the notification bell. You'll be alerted when I go live Monday morning at 8 a.m. All right. So now this video today we're going to talk about is that this week we have some big numbers coming up. All right, we got PPI data coming up on the 15th at 8:30 a.m. We have the Fed minutes from the January meeting coming out. All right, so we got a lot happening right now. The SPY pulled back really hard on Friday, just like we said it would, or potentially could on Friday, and it came all the way down to the 200-day moving average, actually pierced it and closed underneath it. So what's going to happen? Well, in this video, we're going to jump into the SPY chart, and I'm going to tell you what I think is going to happen or potentially will happen this week, but it all depends a lot on what this data shows. So for example, on the 15th, when the PPI data comes out, if it's showing a bigger climb in inflation, well, if it's costing the makers of goods more to make the goods, what do you think is going to happen? They're going to drop that price down on us, of course, and it's going to go higher, meaning inflation goes higher. So as long as this keeps happening, it's not going to be looking good, right? We also have a closed door meeting this week with the Fed that's going to happen. So there's a lot happening this week. If inflation continues to run rampant, they're going to come out stronger. We've been saying it for over a year that first of all, that inflation wasn't transitory. We've been saying it on live streams constantly. Inflation isn't transitory. Finally, back in November, Jerome Powell retired that word. And then we said 3 rate hikes. It's going to be more than that. Whatever they're saying is always going to be more for the most part. You can, kind of like educationally guess on it, because the reality is they're always going to come out and try to calm the markets and hide a little bit of the truth, kick the can down a little bit further. And now it's getting ugly. It's getting really bad. Inflation data that we're seeing, all right? Last week it came out. We're seeing inflation that we haven't seen in 40 years. I mean, the last time we had inflation data like this, I wasn't even born yet. That's insane to me. Insane. So they're going to probably have to start getting very aggressive. I wouldn't be surprised personally to see a very hawkish Fed in these Fed minutes that are going to come out. And that's going to send the market really like into a whirlwind. It's gonna get ugly if that happens. Now, we as active traders are gonna have opportunity there to day trade and swing trade, SPY puts, shorts on our favorite company that looks weak. And as investors, we're gonna be able to buy and buy some good stuff, maybe on the cheap. So now what we're going to do here is we're going to jump into the SPY chart, all right? And then we're going to look at what the SPY has to potentially offer based off of certain levels. Now let's go ahead and do that. Smash the like button for me and let's jump in that. All right, guys, so let's say PPI data comes out it's going to come out on the 15th and at 8:30 a.m. So let's say it comes out, it's really looking bad. Inflation is another notch up. And what do we think is going to happen? Well, we're going to go lower. Now, what are the levels to watch here? We've already pierced through that 200-day moving average. You can see that 200-day moving average right here on this daily chart here of the SPY. And we're finding a little bit of support here around this 439 area. If you scroll back some here, what are we going to see? We're going to see a little bottom right here at 439. And very, like a little bit of structure back here. Not a whole lot. This level is not a very crucial level. It's more along the lines of a minor level. Where is there more of a stronger level? It's going to be right back in that 200-day moving average area. Why? Well, you know what? We're going to clean up this entire chart from all the previous lines. We're going to put a line right across that 200-day moving average. And what are we going to see? Boom, resistance. Bang, support, right? We're going to scroll back. What are we going to see? Bang, support again. right? Right there in that 200 day moving average level. Look at this, resistance. You see how you're getting more price action lining up in that level? Boom, support in the past. Again, support in the past, right? Look, again, support back here on the past. So that level there is a little bit more in depth, a little bit stronger, has more validity to it. So what do we want to see now? Well, I think we might not get it, but if we do, if we get it, maybe we get a little bounce back into that level on Monday and we reject it. Monday will be the 14th. And then on the 15th, PPI data comes out. Boom. We break through Friday's low. On Wednesday, we get the Fed minutes. And I think at that point, we get something nasty. We get something nasty and we get back down here to the 430s. And then I think at that point, it's almost like a no-brainer where we end up doing something, you know, possibly like that, right back into what? These 427s, which were the October lows that held very well on this last dump. Now, will this be the end of it? Will we just bounce right back from there? I don't think so. I don't think so. I think we go eventually right back down here to 420. And I would say, honestly, I'd venture to say that we go right back down here to the 14s, right? Like the 415, 17, 18, those 14s by the summertime, if not sooner. I'd say probably by the springtime. That's my forecast. But now that's getting a little bit ahead of ourselves. Let's stick to this week. So Monday, Tuesday, Wednesday, right? Let's stick to this week. So I'd say best case scenario, Monday, Tuesday, Wednesday, Thursday, Friday. That's what I would say, best case scenario. Now, what could be the worst case scenario? Well, depending how weak futures might be, right, on Sunday night, going into Monday, they can get a little bit dicier, a little bit quicker. Why? Well, simply put, people, right, in general, might start to get a little bit nervous. Man, we got the PPI data. Everybody thinks and knows more than likely it's going to be nasty. We got the Fed closed door meeting. What's that about, right? You got all that hype. And then you got the Fed minutes coming out from the January meeting. So then at that point, what's the worst case scenario? Well, probably at that point, what I'll be looking for will be Monday, a gap down under Friday's low, which I think we probably get. Hold resistance in the morning right there at Monday's low. So Monday, we get a little bit of a gap down, right? Monday the 14th, maybe we get a little gap down. We test Friday's lows, reject. And then maybe we kind of like get down here to like, let's see. Maybe we get down here like 433s, previous low support levels. We get down here like 433s, and then maybe we stall out a little bit. Then Tuesday we get PPI data. On February 15th, we get the PPI data, right? And maybe that day we get the continuation down here, maybe to the 420s, maybe even these 427s. If it's really nasty. And then Wednesday, like this is worst case scenario at this point, and I'm more inclined to believe in worst case scenario. Then Wednesday we get the Fed minutes that come out, and if those things are nasty, boom. So we would be looking at a very nasty downtrend that I think would just basically at that point, if this level does not hold at 420, it's going to get really ugly really fast. So this would be my most bearish case scenario. Monday, Tuesday, Wednesday, right? Monday the 14th, small gap down, maybe a little bit choppy-ish. Then Tuesday, PPI data the 15th. Then the 16th, Fed minutes come out. And bang, all the way down to 420. That's what I'm more inclined to believe would happen here, especially with the volume that's been coming in here on the last 2 days after this rejection up here of the 100-day moving average. You guys remember way back here when everybody was like, oh, yes, we're going to go rally. We're going to go right back to all-time highs. And I got on YouTube and I said, guys, this is a sucker's rally. Well, this week, on this day, in the live stream, in the pre-market, I said, guys, sucker's rally. Boom. Look at that. Are you kidding me? Are you kidding me? So you gotta be watching out for this data that's coming out, guys. You can't just think that everything's just gonna bounce at these levels like it used to. It's not the same environment anymore. I tweeted out a while back. I put out a pinned tweet. I pinned it on my Twitter account. I'm gonna show you a little clip here, a little box. And then there's on the description section of the video, you can come check out my social media. You can follow me on Twitter. I said this year, it's going to be the year where you're going to see a lot of furus disappear. A lot of these furus that are out there selling $20 investing courses and whatnot, they're going to disappear. Why? Because it's no longer, you know, this environment. It's definitely no longer this environment where these little dips get bought right back up. That's long and gone. That's not happening anymore. And it's been proven here. Okay, and now it's been proven here. It's been proven here. And as long as inflation is running rampant, it's gonna get nasty. And I would not be surprised to see the SPY somewhere in this box this summer. And no new all-time highs this year. I've been saying it since the year started. I think I might have even been saying it since December. So, got to keep that in mind and trade accordingly. And now, for me anyways, I'm going to be scooping up good companies that I like for the long-term hold, you know. And I'm going to leave them in my retirement account. And I'm going to leave them in my taxable long-term account. And then I'm going to just keep active trading like I normally do. All right. Guys, really quickly, remember to come check us out at daytraderchatroom.com. There is a link in the description and in the comment section. You can come get 30 days for free. And also there's free chat Monday. So come on, check us out. Any questions, drop them in the comment section below. Thank you very much for watching. I hope you have a great week. Stay safe out there. Remember, I stream Monday at 8 a.m. So come check it out. And I'll catch you on the next one.